All right, it's 12 o'clock. I want to welcome everybody to the Iowa Learning Farms Conservation Webinar Series. Thanks for tuning in today on a bright sunny day, and at least in central Iowa. It's great to be back on hosting this. I'm Matt Helmers with Iowa State University, director of the Iowa Nutrient Research Center and a faculty affiliate with the Iowa Learning Farms program. And as I say, I get the great pleasure of helping to moderate many of these webinars. And this week, we have a very timely and important topic, which is talking about climate smart agriculture and crop insurance, a 2023 update. And we're really fortunate to have Pamela Stahlke, that's the director of the St. Paul Regional Office of the USDA Risk Management Agency, here to talk to us. So I will turn it over to Pamela. And as always, if you have questions as she is going through her talk, please type those in the chat box, and we will get those to her at the conclusion of her talk. So with that, the virtual floor is all yours, Pamela.
All right, thanks, Matt. Thanks for having me today. I like to start off our presentations with a little bit of what is crop insurance, or Crop 101. So just going to tell you a little bit, the former teacher in me, we're going to talk a little bit about what we do here at the regional office. I'm going to give you a very short crop insurance overview if you're new to crop insurance, or if you have crop insurance, I'd like to make sure you understand your policy a little bit. Then we're going to jump right into just our climate smart program updates and changes that are relevant for Iowa. And then I hope you're going to have some questions for me. If I can't answer them, I'm going to find people much smarter than myself that can answer them for you, and we'll get back to you. So let's talk a little bit. We're the St. Paul Regional Office, and our job is to administer the crop insurance program for our three-state region of Iowa, Minnesota, and Wisconsin. We're small but mighty. There are 12 of us, and we serve your region. I like to let you know a little bit about RMA. It kind of sets up our talk today. There aren't a lot of us, but there are 10 regional offices that service USDA. If you're familiar with USDA and you're a program participant, you're probably used to going into your local farm service agency or your NRCS office. That's where I started my career at USDA. And for us, you probably don't see very many of us. Most of your interactions probably happen with your crop insurance agent or your crop insurance adjuster. But just kind of like to let you know how we're set up here. So we do have our regional offices. We're the ones that do policy and procedure. And then you can see the little circle over to your right. We also have our compliance office. So those are folks that if we need to do any boots on the ground servicing those policies, or if you have any concerns with those policies, they're also based out of Eagan, Minnesota, and they service this region as well. In addition to that, we have our folks that write the rules for crop insurance that Congress hands down to us, and they're based out of Kansas City. I also worked there for approximately 5 years prior to getting to come back home here to the Northern Midwest. So just to give you an idea of scope and scale of what RMA looks like and how we're chopped up, this is how we're broken up. You can see us kind of up there in the mustard color in the north. And then this is how the rest of our regional offices are parceled out. I like to start our talks explaining to you a little bit about how your crop insurance works. If you didn't know this, we are one of the only, if not the only, public-private partnership in the federal government. So at the top of the pyramid here, we have USDA, the Risk Management Agency. That's who I work for. There are 450 of us. We are governed by legislation and regulations. And in between us are private insurance companies. So in 2022, we had 14 insurance companies. These are your Farmers Mutual Hail, your NAUs, your RCIS, your Rain and Hail, your ProAgs, just to name a few. Unlike when we go buy our homeowners or our car insurance, we have pretty much unlimited choices of what company you'd like to buy for. Well, in crop insurance, there are only a limited number of companies that are actually have agreements to sell crop insurance with the federal government, and we call those approved insurance providers. What governs that selling of insurance is the standard reinsurance agreement. So that's essentially an agreement between the federal government and the AIPs that state what they will do to provide all of our customers crop insurance. It also governs how much they will be reimbursed or paid for that crop insurance. So unlike going into your local USDA service center where you're dealing directly with your program technicians and your CEDs, your district conservationists, you're aware that you deal with your crop insurance agents. So that's our next bubble. There's approximately 13,000 crop insurance agents in the country, and we have about 5,000 loss adjusters. And then in the middle, we have our insurance policy that if you are an insured, that's the policy that you've taken out to protect all of your liabilities, whether it's livestock or crops. And then our producers, 1.3 million of you. I always say I do what I do because I am a 5th generation farmer's daughter, and I'm really honored to be able to serve our customers and be a voice at the table for you all. Next, I'd like to spend just a moment to talk about our crop insurance cycle. So how does your policy work? We are at a really great time to be speaking to you because hopefully you are looking at what's going on in crop insurance, because March 15th is a big sales closing date. And that's the date that if you are a farmer of most of the crops in our region, you need to buy your crop insurance policy by then. So that is our green application process. If you don't get crop insurance by March 15th, for the most part, unless you have a crop with a later sales closing date, you will not have coverage this year. So right now, I know that you've probably bought your seed, or you're looking at buying your seed, your fertilizer, and you're making those decisions. So if it's a crop that you might be growing and you want insurance, you want to have those conversations with your agents right now. Next, we've got acreage reporting, summary of a coverage, and premium billing. So acreage reporting, for us, it happens in the summer and in the fall. You plan what you think you're going to plant. You have that conversation with your insurance agent and put it on a policy March 15th, but you don't actually get a summary of coverage similar to what we get for our home or our auto policy stating what you have insured until you actually report those acres, because reporting those acres actually puts that crop on the policy and also puts you on the hook for having a premium due, because we do not bill you for crops that you do not plant. So you report your acreage by July 15th. We send you through your insurance company a summary of coverage, and then we bill you for your policy around August 15th. If something happens to you, that's in our blue arrow there, that's our claims process. So hopefully this is why we have crop insurance. We want you to be able to keep farming. So we just encourage you to keep those lines of communication open with your agent. And if something happens to your crop, to notify them as soon as possible. Last, something that I don't think a lot of our insureds are aware of is we have a contract change date for every single crop that we insured. A contract change date is a date that RMA publishes where we are telling you if we're going to make any changes to that crop, we are going to tell you by the contract change date. This is so you have an opportunity to provide input to us on, hey, I like that, or I really don't care for that. It's also an opportunity for you to say, I'd really like something different with this policy. If we're going to make a change for the upcoming crop year, we're going to make it by the contract change date. So you have an opportunity to make questions and make decisions ahead of that sales closing date. Next, I'd like to take just a minute and explain to you a little bit about your subsidy that happens on crop insurance. This is not a handout, folks. I'm probably speaking to the choir here, but it's expensive to have insurance. And this career and feeding America is really important. And we want to make sure that the coverage that you need so you can keep farming is affordable. So this is just an average example of a premium subsidy. And it's the average premium subsidy is 62% of a total premium. So in this example, we have a 70% coverage level, where, as you're aware, you have to have a 30% loss before that would kick in. So if you have a $20 premium per acre, the farmer is going to pay $7.20, and we USDA, or the government, is going to pay $12.40 of that premium, just to give you an idea of how that's working. Then I'd like to just take a moment, and I won't read all these, but just give you an idea of what we insure in Iowa. We insure a lot. We insure everything from bees to apples to soybeans to sweet corn to milk to livestock. So hopefully, if you have an insurance need, you're having those conversations with an agent. I also like to throw a little bit of crop statistics up there for you. Just looking at the top 10 crop and livestock insurance statistics for Iowa. So probably not surprising that corn and soybeans are at the top, but you might be interested to see that feeder and fed cattle and dairy cattle are also in your top 10 crops, with popcorn rounding out that number 10 spot there, and swine in number 3. So this is probably what you're on for today. I'm going to go into a little bit of what's changed or what's new or what I think you might be interested in for the upcoming year. So I know there isn't a lot of small grains, but this is big news if you're a small grains producer. We are now offering revenue insurance. Previously, you could only get insurance that covered your yield. It didn't cover price protection. So this is just hot off the press. Comment period is open through the end of January. And now we are offering that yield protection for oats. What does that mean? Well, in addition to being able to protect your price basis, it offers you more unit divisions. So a basic unit is essentially what you're growing for oats on the farm. If you're growing in different sections, you have an opportunity to spread your liability out, and it can also make it cheaper. By going to a revenue protection policy, we're able to offer you a whole farm unit, an enterprise unit by irrigated and non-irrigated, or if you're farming over county lines, also ask about multi-county enterprise units. Just a little bit on oats pricing. Our oats prices are based on soft red winter wheat. Why, Pam? Probably because if you're an oats grower, you realize that there isn't necessarily a consistent market every place in the country. And there is typically a consistent market price for soft red winter wheat. So that's what your pricing is going to be based off of. Your pricing for this crop is released 2 weeks prior to sales closing date. So you can run quotes and have an idea of what your price basis is going to be. We have price discovery periods, and that is the period of time that we use to grab those prices off the market to set the prices. And we will have a price discovery period for our projected price that we're going to base your premium and liability off of in February. And your harvest price is going to be based off of our August pricing. If you're an organic producer, we're also going to have distinct organic pricing. So I just have a brief snapshot here for you of oats with a March sales closing date of your price discovery period being February, the month of February for your discovery price period for your spring price, and your harvest price discovery period is August for your harvest price. And then I like to throw up just a brief example, being very careful here that I'm not trying to sell you one way or another, just inform you. And the big difference I want to point out here for you is in your yield protection, which is the previous coverage that we have, we use your projected price, which in this case was $3.28. When you pick up a revenue policy, one difference in addition to having enterprise units is we use the greater of the projected price or the harvest price when it comes to indemnities. So in this case, the projected price was $3.28 and the price went up at harvest time, it was $3.47. So when it came to factoring this indemnity, the harvest price of $3.47 was used, and it made for a slightly larger indemnity. Again, it's luck of the draw. If you're a farmer, you got a little bit of a gambler in you. And so that's one of the differences between a yield protection and revenue protection policy, just at a glance. I also want to talk to you about our double cropping initiative. So our goal here is to increase food production by increasing our number of counties where soybeans are planted following another crop. We have done an extensive amount of outreach and discussions, and if you've been involved in those, I just want to take a moment and thank you. Thank you for your input. Thank you for talking to us. Thank you for the time and educating us. We are doing this through program expansion and easing our history requirement for written agreements. First of all, I want to take just a minute. What do we consider to be double cropping? That's producing 2 or more crops for harvest on the same acres in that same crop year. What are we doing for double cropping? Well, Iowa, you're the lucky folks in our region. We are actually making a change where for the rest of our region, the feedback has been keep it the same. In Iowa, you told us that in the southern tier of Iowa, you feel that your geography, your farming practices should allow for written agreements without history. Pam, give that to me in layman's terms. Well, here it is. In order to double crop soybeans following another crop, you need to go to your agent and request to send a written agreement, which is an underwritten policy that comes into our office, and we authorize the crop insurance policy directly through the RMA regional office, and we sign off on the policy for you. Well, in the southern tiers of Iowa, in this orange map that you can see, we have removed the requirement that you can see we highlighted in yellow. Prior to 2023, you must provide a minimum of the most recent 3 years of double cropping actual production history for the crop in the county. That means you had to have 3 years of history of producing it in order to get that written agreement. Your feedback to us was that in this portion of Iowa, it's a good cropping practice or it should be allowed for you to be able to crop that second crop without having that history. So that is a change. Now, just some caveats. If you don't meet double cropping provisions or you don't go through this written agreement process, your payment could be reduced because we do have first and second crop provisions. Written agreements don't change any double cropping or prevent plant policy requirements. Again, due to limited time, please talk to your agents about this or send us questions. And having a written agreement does not exempt you from following policies and procedures for double cropped acreage. Left foot, right foot here, we've also heard that you're doing a lot of relay cropping. So we've also defined relay cropping for us here at RMA. Relay cropping is when a second planted crop or that relay crop is planted using that generally recognized seeding rate into an established crop. And for the people on this call, I probably don't need to educate you on this because I'm thinking that you could educate me on this more than I can tell you. We had some great opportunities to get out in the field and look at this last year and got some great feedback that farmers are doing this. A caveat here is that damage to either crop during planting, harvest, or maintenance of either crop is considered an uninsurable cause of loss. So what's happening with relay cropping? Well, we're split into different zones based upon some of our FPAC partners and how they differentiate zones. And ours are based upon NRCS termination guidelines. So in this zone 1 in blue, we're kind of split here in Iowa. You don't have to have any of those records requirements for relay cropping. In the west tier of Iowa, in that yellow area, it's the opposite of double cropping. So you have to have 3 years of records showing that you have done relay cropping in order to get a relay cropping written agreement. So again, a little bit of flip-flop of double cropping soybeans here. It's another written agreement situation. Please have a conversation with your agent about this or ask us questions. Here in a moment, I'm going to share some resources with you. We've got a lot of information out there if you've got questions to hopefully be able to educate yourself before you ask questions. If you're like me, I want to read everything I can before I go to others. But we are available here and are happy to have any conversations with you. Just some more updates on relay cropping. Relay cropping will continue to be insurable through our written agreement process. Your deadline for these, if you've had a relay cropping written agreement in the past year, and we have written some of those, you need to request your written agreement by sales closing or March 15th. If you haven't had one, you have until acreage reporting for that written agreement request. Earlier is better because you could be subject to inspection if the crop is already planted prior and come up prior to your written agreement. I'll skip to the next page. I'm happy to share out any of these links for you. Just know that we have, as I've stated, lots of information out there. We've got a special link on our webpage at RMA, at usda.rma.gov. And again, we'd love to answer any questions for you. In the essence of time, I'll keep trucking here. The other thing I wanted to share with you is we have this program called PACE. PACE is a post-application coverage endorsement. It is added to an underlying insurance policy, and it provides coverage if you are prevented from post or split applying nitrogen due to wet weather. The feedback we have gotten is that folks are doing this. And so this is an insurance addendum or endorsement if you have chosen to use this type of climate smart practice and you wanted to insure against being prevented from applying those additional or scheduled nitrogen applications. Previously in the green area, you can see it was offered in parts of Iowa. It's been expanded to all of Iowa for the 2023 crop year. The best I can tell you is we have a really great fact sheet on our webpage. Please go ahead and reference that. And also ask us any questions that you have, ask your agent any questions that you have. And if you might be interested in this, have your agent run you a quote to see if it's something that fits in your budget. If we have a few moments here, I just wanted to share with you, how did we get to the changes of where we're at? Well, we do a program performance assessment every year. And essentially what we're doing is on a 6-year cycle, we're reviewing every single crop that we have insurance on. And during that process, we're completing outreach, we're educating, and we're also looking at different policies. In the underwriting reviews are not to look at, oh, farmer, what are you doing wrong? Agent, what are you doing wrong? It's for us as RMA and the RO to educate ourselves on how we can do things better. And then I showed you some pictures in the relay cropping slides of that was actual relay cropping that was happening in Northeast Iowa last summer. We're doing growing season observations. That's our opportunity to get to come out and meet with producers, and you show us what's going on your farm and educate us. So I just wanted to share, as I'm concluding here, what we're looking at this year. So we're looking at climate smart agriculture. We're hoping that you're going to share with us, tell your story. What are you doing out there? Is there something that we should be recognizing or some way that we can be reactionary? We're looking at livestock. We're looking at hybrid seed corn. We're looking at nursery. And then the other impacted Iowa crops are dry beans and oats. We'll be doing 7 to 8 underwriting reviews. As I've stated, these are policies that we're doing a desk looking at them. And then we'll be doing 6 to 7 growing season observations where we're going to get out in the fields and these crops and policy areas you see on the left, we're going to go see how you're actually doing it out in the field. And then as I'm concluding here, I just wanted to share one of the things that we've done in this past year as part of our program performance assessment that hopefully you're going to see an impact. You shared with us that you wanted some changes to soybean earliest planting dates. So on the left, you'll see what they were in 2022. So you can see in Iowa, the earliest planting date was 4/21. I'm a northern gal. I live in Southwest Wisconsin, but I did live in Missouri for a while. And so I'm well aware that if you live in southern Iowa, that your climate's slightly different from the rest of us. So looking at climate data, having conversations with extension agents and producers and grower groups, we've made some changes. So now you can see our soybean earliest planting dates are now 4/10 for the southern tier and 4/15 for the northern tier Iowa. So in closing, I just wanted to thank you for your time. I hope you have some questions for me. If you stump me, I'll find people smarter than myself to get back to you. And please continue to reach out to us and provide any feedback and ways that we can improve the crop insurance program for you.
All right, thank you, Pamela, and be sure to get those questions in. We have a couple, but have time for some others. And if you are on and need a CCA credit, please email Alena Whitaker, ALENAW @iastate.edu by 5 o'clock today with your name, the name you entered to watch the webinar if different, and your CCA number. Again, that's Alena W, ALENAW @iastate.edu. And maybe you can go to the next slide, Pamela. If you want, so it's a voluntary demographic survey for those that participate in USDA funding, and Iowa Learning Farms is in part USDA funded. So we have a new voluntary survey and it is voluntary for viewers to fill out. It only has to be done once. So if you've done this already, after watching a previous webinar, thank you. There's a QR code on the screen. I'll leave it up there we'll leave it up there for a second if you want to scan that. Or I'll also put the link into the chat box. So if you want to find it that way, you're able to do that. So that QR code is up there and the survey link is now in the chat box. So if you're willing to do that, we'd greatly appreciate it. Again, voluntary demographic survey. And then the last one should be for to highlight the webinar for next week. Is there one more slide, Pamela?
There is. Sorry about that.
Nope, no worries. All right, so next week we have Marshall McDaniel, Associate Professor in the Department of Agronomy here at Iowa State University, talking about directly linking soil management and the eutrophication of Iowa streams. So I think an important topic. Okay, keep getting your questions in, but the first one was when you talked about the I think 30% loss. How is that 30% loss calculated for, I think for your example that you showed there?
Sure. Matt, are you okay if I go back to my
you betcha. Yep.
example? Okay.
Yep.
Sorry for the quick flipping. That's
okay.
It's annoying to me when I'm sitting out there. So sorry about that. So hopefully this will maybe help. So essentially here we are with, in this case, they have a 75% coverage level. So you'd have to have a 25% loss prior to your, before your crop insurance kicks in. So here the producer has a 65% bushel APH yield. So can you guys hear me?
Yeah, I can hear you great. But for those of us that don't, can you just describe what the APH yield is?
Yeah, I'm glad you said that. And I'll tell you truthfully, for time's sake, I took this slide out. But if you hear me speak before, I usually have a couple of slides where I talk about APH. So your APH is your history. How do you typically perform on your farm? It's up to 10 years. Your APH database builds up to 10 years and then rolls over each year on what you historically grow on your farm. So this producer has 65 bushel APH yield or 65 bushels of a historical yield of what they typically grow on their farm. So their coverage level, their APH, let's look at the yield protection on the left. 65 is what their guarantee is based off of what they typically grow. They have a 75% coverage level. So that trigger is 48.75 is their bushel guarantee. So that means anything below 48.75 is going to put them in the loss category. So I don't want to insult anybody's intelligence here, but I'll just continue the flow. So if you follow the example, in this example, their yield for this year was 30 bushels per acre. So you take the 48.75, which is their guarantee, that's 75% of their 65 bushel actual production history, and that gives them an 18.75 bushels per acre loss. Now, this is where on a yield protection, we're using that projected price, which is the spring, what we think RMA publishes that, what we think the crop is going to be worth. And that times 18.75 bushels times $3.28 gives them a $61.50 indemnity per acre. Was that helpful?
Yeah, I think it was. At least it was for me. Hopefully.
Full disclosure, I've always been on the marketing side. So if you stump me on claims, I'll ask someone else.
A question came up in my mind. I'm going to take my prerogative as a moderator. Now, this may be a question everybody else knows, but so that APH yield. So if somebody were to start growing a new crop like oats, so, if I'm a producer and I'm corn, soybean, and I start oats, I don't have any crop yield history for that. Can I get insurance or what? How does one go about that? Or
no, that's a great question. I'm really glad you asked that. So we have set at RMA, if you are sitting at a computer right now and you Google RMA AIB, it's the actuarial information browser. We have set T yields, which is what we have used gathering your information, you as farmers, we feel are the actual county yield. So your APH as a new producer is going to be set using T yields. So if you don't have any actual yields, your database will be set up using T yields. There's a lot of nuances in here, so I won't get in the weeds with that. But the only thing I will tell you, if you are a beginning farmer or a veteran farmer or rancher, you can get T yields that are at a greater level than a typical farmer. And those T yields are used for many different things.
Great, thank you. All right.
Great question.
The next one is, who's insuring the swine? Is that the farmer or the integrator?
No, I'm really glad you said that. So the person insuring the swine has to be the person that is at risk for the crop. So in this case, the person who is at risk for if the swine were to perish would be the person that needs to be taking out the swine policy.
Great. The next one, is there any crop insurance adjustment in floodplains?
Yes. Can you clarify the question better? So maybe this will help.
Okay.
We write insurance. We will write insurance in what we call that high risk land. So I talked to you a little bit about written agreements, and I'll answer it this way. If you're farming high risk land in a floodplain, you can still get insurance usually. And you might have to get a written agreement, and your rate might be slightly higher because your land is at a higher risk. We just redid our policy and procedure as to how we rate land, which is how much you pay your premium. And Iowa was a state that was affected. If you have questions on that, please reach out to our office. We would love to have a conversation with you and explain further how we rate high risk land, because that is almost a presentation in itself.
Okay.
But yes, we do adjust in floodplains.
Well, I know I would be fascinated by that presentation. Maybe not a lot of others, but I
Yeah,
would.
I'll be honest with you. I almost put it in here, but
Okay.
with 25 minutes,
Yeah.
I didn't think I could do it.
Okay. So we might have to ask
But
you
I
that.
would love to, I'd love to share with anyone who'd like to learn more about that.
Um, this person asked if there were, any plans in the pipeline to link crop insurance to any conservation production systems. To qualify for any insurance, producer must enact a certain conservation method within their production system.
So our farmers actually have that right now. So if you are a crop insurance participant, you do have to fill out a 1026 with NRCS, and that is, and gosh, I'm ashamed of myself that being an FSA person, I feel like that form might have slipped out of my mind, but you do have to be conservation compliant to be a crop insurance participant. And we partner with NRCS to do that. And there's a checks and balance to make sure that you do have that on file and that you are in good standing with NRCS in order to receive your crop insurance subsidy.
Okay. All right. Those are the questions that have come in, Pamela. Maybe we can just go back to the slide. I'll highlight again what's coming up next week, which is Marshall McDaniel about directly linking soil management and the eutrophication of Iowa streams. And then if you need a CCA CEU, you can email Alena, ALENAW at iastate.edu by 5 o'clock today. And while I talked, there was another question that came in. Are there any plans to offer premium discounts for cover crops like were offered the last couple of years?
Oh, yeah, the pandemic cover crop program. As of right now, all I can tell you is that has not been renewed. And I don't want to insult anyone's intelligence here, but you're probably aware that Iowa has a fantastic program for cover crop through the state of Iowa. So if you're not aware of that, please reach out. We'd be happy to send you information regarding that. But for a federal program, as of right now, we have not been told that that program has been renewed.
Yep, the person that asked that runs the IDOLS program. So thank you. Positive shout
So
out.
you can teach that to me.
Yeah, no, yeah, that person. Yeah, what? And they just hadn't heard if RMA was going to.
Yeah, we have not heard. Also, we are also asking that question. I'm actually going to leave this and go back to directors meetings, and it's in our afternoon. It's in our afternoon update. So
all right, well, you can relay that you just gave a talk and somebody asked about it. So
I will.
All right, Pamela, I want to thank you so much for a really informative presentation. Thank everybody for watching today. And as always, this will be archived. So I think there's a lot of information all of us can learn from. So go let people that know about the archive version. I'm tongue-tied today. So thank you very much.
Thank you so much. Have